What's going on? What's going on? What's going on, family? It's your boy Niggas Royce Wheeler. How y'all doing today? Gonna give everybody a brief moment, get some people on. All right. And this is Webcam Wednesday, man. Hopefully, you guys have been tuning in to my boy Evan Jefferson for the last few days with the crypto education every morning, 7 a.m. And what I'm going to do today is we're going to talk about investing in startups. All right, we're going to talk about investing in startups. My name is Negus Royce Wheeler. I'm the owner of WebK University. WebK University, we've been around for about 7 years. We've been doing taxes. We've been doing portfolio investing consultations. We've been doing crypto. We've been involved in investing for a long time. We also own a credit repair software, and we do outsourcing as well. So if you're ever interested in any of those, feel free to inbox me. Feel free to contact us, inbox the page, or contact us 727-280-6854. All right. So what we're talking about today is we're going to be talking about a few startups, okay? And what we're going to really be going over is a few platforms. All right, we're going to be going over a few platforms. So give me one moment. What I'm going to do is I'm going to go to Yield Street. Give me one moment. All right. So we're going to go over 4 platforms today that you can use to go ahead and invest in. All right. And really, the main reason for investing in these platforms would be to diversify. All right. It would be to diversify our portfolios, to, to hedge against the market's ups and downs. All right. You have the stock market, you have the crypto market, you have the real estate market, you have all of these different markets outside of this market that you can invest in. All right. And so what you want to do is you never want to put all of your eggs in one basket, right? You want to, when things are down, you want to have something that's up. All right. And hopefully everything's up. But we all know as you get older, you realize that there's a chance that there's always going to be something that's down. And when everything is up, you want to accumulate assets. So when things are down, you can go ahead and make sure that you're in the correct spot. All right. So one of the first sites we're going to talk about tonight is Yield Street. All right. Yield Street is a site I came across a few years ago. I invested with them one time. But the main thing with Yield Street is they are a platform, okay? They allow you to diversify your portfolio and get into any of these asset classes, all right? They allow you to get into any of these asset classes. And usually investing in startup businesses, this is something I would suggest once you get your stock portfolio or you get your crypto portfolio going. All right, your stock portfolio with dividend stock and stock that's going to pay you back. Your crypto portfolio with assets in there, of course, that are earning interest. There are so many platforms in the crypto market that are giving you interest. You're going to be getting dividends. You should be getting dividends in that market as well. And then what you would have here is third, we would go to something like Yield Street. And instead of us physically being invested in businesses, you would come here to something like Yield Street and you would go ahead and whether you're an accredited investor or you're a non-accredited investor, you would go to somewhere like here and go ahead and invest your money. Now with Yield Street, you would need a minimum of $1,000. All right, you would need a minimum of $1,000. Now with this site, this is the highest minimum of all the sites we're going to talk about tonight. So don't be discouraged. All right. And there are a couple different asset classes that you could get into. But just looking at right now, all they're offering, well, no, you can get in here in a multi-asset class fund. All right, minimum of $1,000. And just to learn about the fund a little bit, it's called the Yield Street Prism Fund. Okay. So the first question, of course, you would be is, well, how much would I get back? Okay. So the Yield Street Prism Fund is a fund that would be going on for 3 years with an 8% distribution rate. All right, 8% distribution rate based on what you put in. with the minimum of $1,000. So the minimum you would receive is your $80, and this 8% is after fees. All right. With Yield Street, you will be looking at fees of around 1 to 2% annually on each individual investment. And what we could do is look at the fee summary eventually. All right, but just looking at here, you would have quarterly distributions, which means that you will be getting paid your money quarterly. All righty, and then what happens is cash distributions are automatically reinvested into the fund through our dividend reinvestment program. However, you may choose to opt out of the drip at any time to receive the distributions in cash. So this investment has a lot of liquidity, which when we talk about liquidity, what that gives you is the option to go ahead and jump out just like you would if you wanted to, cash out of your stock or whatever. It may not happen as fast, and there may be some fees involved, but they do have the dividend reinvestment program. So every time you get into this, they're reinvesting that money. So each payout, you could get more money. All righty. Total annual fees of 1.5%. Now, the 1.5%, I'm not going to lie to you, family, that is a lot. All righty. Because 1.5%, if you look at ETFs or you look at funds with your stock, you're usually looking at about 0.45%. All right. So just looking at this fee breakdown, okay, you're looking at a management fee of 1%, which usually with a stock, like I said, you'd be looking at 0.45%. Then you're looking at 0.5%. So you're looking at total fees 1.5%, all righty, that you would be paying on this. And the option for limited liquidity, all right. And you always have they also tell you here what the fund would be investing in. So you have real estate, consumer, legal finance, art. So like I said, family, you would be diversifying your portfolio, all righty. But you would be paying them a management fee to go ahead and do this. They also give you a snapshot of the top holdings, all righty, and they give you a fund prospectus. Okay. Now, the thing about Yield Street is, and this is how you would go ahead and invest if you would like to come here. This is YieldStreetPrismFund.com, or you could come to Yield Street. This is the only fund that they're currently offering. That's the thing about Yield Street. They don't offer a lot of funds, okay? But also, they're kind of risky. The thing about Yield Street, when I did my research, is they have a 14% default rate, all right? Now, the reason why is because a couple years ago, they were defrauded for $90 million by someone who wasn't really an investor. So there's always risk in investments like this. But family, this is why you come here and you read. You have to come here and read. All right. Look at how your money will be managed. All right. Sit down with your loved ones. Sit down with your kids, because what I really was doing was when I started doing, jumping into funds like this. All righty. When I started jumping into funds like this. All right. And I'm not sharing my screen. Give me one moment. I'm going to share this other screen. When I was jumping into funds like this, such as this one, all right, I was doing it for my kids. So, every time they get these payouts, my kids can get these checks. They can see how, how investing their money to get this little bit of interest or whatever. But then, it started becoming, because everybody that, in your family can each invest up to $2,500. So it's only so much that you can invest yearly. All right. But the next site I'm going to talk about is, let's see, we're going to talk about Nextseed. Going to talk about Nextseed. All right. So with Nextseed, they don't have a lot of campaigns themselves, but they're very popular. All right. The reason why they're very popular is because they have the highest average check size out of all the platforms. All right. Which means that the average person's check, the money that they're getting back, is the highest. All right. The money is the highest. And let me make sure I'm sharing my screen. Give me one moment. All right. So this is Next Seed. Okay. This is Next Seed. And right now they only have 3 campaigns. All right. So with each of these campaigns, what you would do is you could go ahead and look down the rabbit hole, see what happens. But what you're doing is you're pretty much jumping in with other investors, just like the other platform. All right. And with these, what they do is they tell you what type of investment you're making. Like with the rabbit hole, you have an investment multiple of 1.45x over a 48-month term, so over a 4-year term. All right, with $100 investment minimum. So remember, we just had Yield Street that gives you the $1,000 investment minimum, but here we have the $100 investment minimum with NextSeed. So you don't have to have as much capital with NextSeed as you would with Yield Street. All right. And you could jump in and you could put in 100, let's say you want to invest, you could put in 100, weekly up until, the time frame's over with. Okay. All right. And let's just look at here. So you have the rabbit hole. Okay. What the security type is a revenue sharing note. Okay. And with the revenue sharing note, a business agrees to pay you a percentage of their monthly revenue until you receive the total repayment amount. All right. Payments, if any, may be different every month. All right. And the investment multiple is up to 1.45x. So let's say you put in $1,000, you will be receiving $1,450 back over a 48-year term. Or if they decide, they could decide to pay it all back in a lump sum and you could get it back much faster. But you would be getting this in a monthly stipend, okay, over that period of time. All right. So if your kid, let's just say, you tell your kids, hey, work for this, we're going to, invest. You can make whatever the check is, you can make that their allowance. All righty. Or what you could do is find a way to get that check and reinvest it into another asset. All righty. Reinvest it into another asset. Okay. And there's nothing wrong with that. Go ahead and find another asset or maybe find another investment opportunity that NextSeed has. All right. But what they do is they go over all the highlights. They go over the company description. They go over the business model. All right. They also have something called bonus rewards. A lot of these have bonus rewards. Now, I just invested in a movie, the DJ Screw Chop the Screw movie. And one of the bonus rewards was if you invested $1,500, you will get a ticket to the screening in Houston, Texas. And there are going to be a lot of people there. If you looked at once you guys look at the movie, you're going to have people like Megan Thee Stallion and a lot of other famous rappers out of that area that are going to be there. All right. But just looking at this rabbit hole, when just, putting $100, you get a complimentary drink. So, hey, let's just say one day you decide to go to Texas and you want to visit the investment. Hey, you know what I'm saying? I mean, why not? Go ahead and get your drink. Tell them, hey, I invested and you want to visit, man. You know what I'm saying? You never know what can happen. All right. Invest $500. 2 invitations to the preview party once it's built, and 1 complimentary drink. So for $500, you get an invitation to the party and 1 drink. All right, and just these few different things, you know what I'm saying? Maybe have an investor nameplate installed at the bar. Maybe have your kids' investor nameplate installed at the bar. All right, and then here, custom branded pint glass. You get to name a signature cocktail. All righty, for a whole year, you have your name on the signature cocktail. All right. So you get all of these things as well. Okay. You get all of these things as well. And here they talk about what they're trying to get. They're trying to get $350,000, minimum investment $100, investment multiple up to 1.45. If they pay early, the investment multiple is 1.4. So if they pay early, you lose what, $50? All righty. Revenue sharing percentage. This is how much that they're going to be paying to NextSeed every month, and then NextSeed is going to be dividing that up. All right. So if they're making $100,000 a month, NextSeed is going to get $12,500, and they're going to divide that amongst the investors. All right. Their payments are monthly. All right. So this is a great site. I love this site. I'm invested in the Rabbit Hole. I am invested in also the Cherry Block Crab Butcher and Texas Kitchen. I invested in that. Now, this one here, I am not invested in Morningside Play Care. Why? Because I do not like these security types. This is called the NextSeed Safe. What these are, and these future equity things. Safes are agreements that entitle the holders to discounted equity in a business in the future based on the valuation and the future financing event, such as a subsequent pricing equity round or IPO. So you're pretty much hoping that something like this goes public and then you will get a discount on shares. What's the chance that a play school goes public? I don't even know why they even people that invest in this type of stuff are the type that just like to give away their money. Um, they just like to give their money and just get to a good cause. That's not me. I'm good on that. You know, I mean, I mean, it's all good, man. But I need my money ASAP. You get a 20% discount. Um, so let's just say the business was to sell. Now that's where yeah, this ain't for me, man. Pretty much. So you can read that, guys. That's not for me, but that's next seed. That's all good. The other one I'm going to talk about is Republic. All right, so let me stop sharing that. Let's talk about Republic. Now, Republic, they have an average check size of around $250. So they're kind of on the down spectrum as far as that. But they have a lot of options. All right. They have a lot of options as far as what you can invest in. And I'm talking about they have real estate, video games, crypto. They have crypto, accredited autopilot. So they have a lot of options as far as what they can offer you guys. They have a lot of options as far as what they offer you guys. So you have the Austin Flippers, like such as this. Let's see. They have real estate, the New York City Opportunity Fund. You have an Austin Flippers portfolio. The thing I don't like about Republic is most of these are those safe ones where their companies are bigger, but you have funds like okay, you have the Opportunity Fund. Now this one is not safe, I don't believe. Let's take a look at that. This one is not one of those safe funds, I believe. All right. Um, they move a little slow. All right. I don't know why they moving so slow. That's the thing. My internet's trippy, y'all. I'm sorry if it's coming in a little fuzzy. But here you have the New York City Opportunity Fund. Um, man, look how much they're trying to raise up to 50 million. All right, this is $1,000 minimum investment. Some of theirs aren't like this, but this was $1,000 minimum investment. Let's see what kind of money they're talking about as far as returns. The fund is targeting 12% to 15% net annualized returns to investors. The major factors that would influence investors' returns includes the discount to market value we acquire properties, the rate of appreciation of New York City prices, and the pace at which we dispose of our assets. All right. So the thing about it is the New York City market, if you're into the market, they're not really doing too well right now. So I don't expect a big return too fast on this. But hey, their goal is to get they're targeting 12 to 15%. So they're targeting good returns. Um and they intend to distribute to investors the net sale proceeds of any property disposition we make following the investment period on a quarterly basis. All right, on a quarterly basis. All right, let's see. So this is something you can look at as well. I'm having a problem with my internet, y'all, so I believe it's coming in kind of fuzzy. So I definitely apologize for that. But these are pretty much the investment funds that are available to you. You have Republic, you have Nextseed, you have Yield Street. There's another site called WeFunder. So what I would do is I would pretty much go ahead and research these sites. Alrighty, these sites are available for you. The platforms are available to be the investor for you to do all of these. Now, with these, you will have fees. Like I said, so you want to make sure that your whatever you're invested in, you want to make sure that your foundation is correct. You want your stock portfolio to be correct, and you want your crypto portfolio to be correct. All right, you want your foundation to be right, regardless of whichever investment you decide to pick. So I appreciate you all, family. This is your boy Negus Royce Wheeler. Have a great day.